products. They listened to the idea and they said, okay, for this idea, we will give you the money required. And they actually gave us that money required for financing the project. And at that time, the loan was in foreign currency. And, you know, foreign currency lending or borrowing at that time was in short supply. And they had the supply and they listened to the idea. I think at that time, they gave us the oxygen, I'd call it, you know, to say, fine, move on and get things done. And we started off. But very soon we realized that, you know, foreign currency loans are not going to survive for too long. In 2 years' time, we had to repay the whole lot because we got refinancing done from local banks. The reason was that was a 91, 92 period when we just started off and Kenya had a big crisis. Interest rates went to 82%. The exchange rate went from 30 to 82 shillings. So before that happened, we refinanced it. We were lucky.
I think you were very lucky. For those people who are watching us now who have an idea for starting a business, what would you say to them? Do they need money, or is it the idea that's important and the drive?
I think today, as we speak, there's a lot more avenues of raising capital. Back then, it was very difficult because there were very few lenders. I mean, there was only 1 or 2 development banks, and today there's development banks who will go across borders, even from South Africa, even from Europe or from London, they'll come in. Private equity is available today. There's a lot of capital looking for deal flow. I call deal flow in terms of getting projects done. And there's a lot of people looking at different areas, except they don't get the type of projects that they want, they don't get the type of entrepreneurs they want, and they don't get the type of size they want. A lot of the guys from Europe or America would come in at $30 to $50 million and above that. Whereas here locally, a lot of local people require between $5 to $10 to $15 million for starting up their projects. And that's available from a lot of African corporates who are really looking for new capital investments.
Well, maybe just in ending, I'm sure you are aware, having worked with the EADB, that their ethos really lies in poverty alleviation, job creation. What impact would you say you have made on those two within this business?
When we started off, we were employing only 10 people, okay? And then we started off the soap industry. We started off with about 50, 60 people. Today, across East Africa, we employ 3,500 people. And we're in Kenya, we're in Uganda, we're in Tanzania. And actually, thanks to EADB, we were given that germination power to get off the ground and get things done. And today, we're happy. We're not with EADB anymore, but that's not a problem. I think what was important was at the time when we needed them, they were there.
Well, thank you very much for having been my guest.
Thank you very much. Pleasure.
And now, BIDCO says it is determined to clean up by becoming the market leader in Africa by 2030. Banking today doesn't necessarily mean standing in long queues anymore. Technology has opened the doors to financial access with internet banking, popping by to an ATM to withdraw money, and instant communication between bank branches. This was the challenge for the National Bank of Kenya, how to bring the bank into a technology-driven world where the expectations of clients were high. Isaiah Moria, KNB Executive Director for Finance.
Mr. Moria, welcome to the program. Talk to us about who the National Bank of Kenya is, in a nutshell, and also the relationship you have had with the East African Development Bank.
Thank you very much. Welcome to National Bank of Kenya. Now, National Bank of Kenya came into being in 1968. And initially it was a wholly owned government bank. But in about 1984, the bank became public and came in the National Social Security Fund and the public. And right now, the government owns 22.5% of National Bank of Kenya. National Social Security Fund, which is a pension fund in Kenya, owns 48%, and the public owns 30%. Now, initially, just like another bank, the processes in the bank were manual. But over time, it became necessary for National Bank, as well as other banks, to adopt the ICT technology in order to deliver services to the customers. National Bank was one of the first banks to use technology to serve customers at the front office. That time, in the 1980s, we used a system that was called IBS, Integrated Banking System. Now, that system, unfortunately, was standalone for each branch. And each branch could only service customers and not customers of other branches. So in the area of ICT, as we progressed, it became necessary for us to centralize our operations. And in 1999, the arrangements to do that were completed, but there was the funding bit of it. That is where East African Development Bank, EADB, came in. We wanted to install a new banking system, core banking system, which would link all our operations, link our branches, and that way, a customer in branch A could get services in branch B, even if they are distance apart. That is when we approached East African Development Bank, who were kind enough to provide us with a facility to install a new core banking system, which we call Banking Master.
Well, since the first contact you had with the EADB, has there been a recurring refinancing?
Yes, we had the first tranche. The first facility was for US dollars 3.5 million, which was to enable us, acquire the initial core banking system. And then we also approached the market a second time. The first one was in 1999. The second one was in 2004. And they quickly listened to us and gave us another facility of $5 million. With that facility, we were able to roll out our ATM network. So both of them were actually related to ICT facilities.
Like most of us, I'm sure you don't want to stay in debt. But of course, as you expand, does this mean now that after this long relationship, it's goodbye EADB, or are you going to be looking at going back to them again?
Now, we know EADB is a reliable partner, and we know that should our needs arise again, EADB will be there to listen to us. Otherwise, we are happy with them, and we believe this is not the end.
Well, Mr. Moria, we'll have to leave it there. I've heard some good things about you as far as making this bank liquid again. So well done on that job. Thank you, sir.
Thank you.
A landmark on Kigali skyline, Kigali City Tower. KCT is an 18-story urban development that will provide various facilities, including shopping, entertainment, office accommodation, and city parking, all part of Rwanda's redevelopment and attracting further investment into the country. It's a project financed by the Rwanda Development Bank, or BRD, with the help of the East African Development Bank.
Mr. Kayonga, welcome to the program. Talk to us about the role of the bank that you had, the BRD.
As you rightly mentioned, commonly known as BRD, to stand for Banque Rwandaise de Développement. BRD is a 44-year-old institution that was set up in 1967 by the government of Rwanda, through government of Rwanda institutions, the government of Rwanda, and development finance institutions like the DEG, the FMO, the Bank of Tokyo, and the Belgian government. It was set up as a development finance institution to cover the gap that existed in development finance lending that many emanates from what commercial banks don't do and what government doesn't do, and that is needed for the development of any country.
How is it funded?
The Development Bank of Rwanda remains a non-deposit taking institution for now, and we do get our financing mainly from borrowings and internally generated resources. Borrowings do constitute two types of borrowings. We do have domestic and foreign borrowings. Domestic borrowings are from basically institutions in Rwanda like the pension fund and the government of Rwanda. Foreign borrowings, we have historically borrowed from the African Development Bank, the European Investment Bank, and of recent, we have also managed to get a line of credit from the East African Development Bank. As you are well aware, Rwanda joined the East African community a few years ago, and we became beneficiaries of working with the East African Development Bank.
It's interesting you mentioned the East African Development Bank, because I have a question for you on how the whole line of credit came to being. Talk to us about that.
As a first line of credit, we were given $5 million. The $5 million that was given to the Development Bank has been lent to about 5 companies, picking about 3 of them. We do have 2 in real estate. One is in commercial real estate. The other one is in residential real estate. And then the third project that we also consider as a signature project to Rwanda is a project in steel milling that comes in to address a very big gap that we had in construction materials, and they're pretty much also at an advanced stage to completion.
Is it easy to work with them, the East African Development Bank?
Given our experience with working with several financial institutions, I think we would comfortably say that working with the East African Development Bank was quite straightforward. We were able to close the deal in about 3 months. We were able to fast track on disbursement. And they were also, there was some mutual trust that you'd not have expected of a fast borrower, since we were borrowing for the first time with the East African Development Bank. Their reporting requirements are pretty much standard. So I would comfortably say working with the East African Development Bank is something that we were very happy to do, and we are most certainly going to keep on doing in our endeavor to develop projects in Rwanda.
We've been traveling the East African region talking to people about their interactions with the East African Development Bank. Some say they're great, they hold your hand, and they really want to stay with you. Did you find that to be the experience with them with you? Or, in your opinion, would you say they hover around maybe a bit too much?
No, they do not hover around it. They give us the money. We manage it. We just agree on reporting standards and ensure that the reporting standards are respected. And based on that, they have trust in the relationship of the bank.
The East African Development Bank has just opened an office here. And there's also the African Development Bank. And you are here as a local development bank for the country. Would you say the space is now a bit crowded, or the more the merrier?
I think the existence of those 2 sister institutions does not bring in an issue of competition. They are not in to crowd us out, but as a matter of fact, we are now creating a platform for more syndications, because they will always want to work with the Development Bank, because we do have local content, and would help a lot with the monitoring of the projects. And given the size of our balance sheet, there's some projects we would otherwise not have invested in. So having syndications and co-financing with these institutions is something that would definitely be of great help to the development of Rwanda.
Well, Mr. Kayonga, we'll have to leave it there, and we hope you continue developing Rwanda. Thank you, sir.
Thank you very much. Thank you, sir. Pleasure as ours.
The commitment by the EADB to development and people and companies with vision has resulted in many entrepreneurs having finance at the right time to grow their businesses. And as a result, the bank has played a crucial role in the economies of countries throughout East Africa. EADB Director General Vivian Apopo says that the next challenge for the bank is to help grow the region as a whole.
Welcome to the program, ma'am. Talk to us about the early days of the East African Development Bank, and what was its mandate then, and whether that mandate has changed. Also talk to us on whether you are meeting that mandate.
The East African Development Bank commenced its operations in 1967. That was just soon after the member states, the original member states of the EAC, that's Kenya, Tanzania, and Uganda, attained their independence. And they felt that they would need a bank that would be sensitive and perceptive to the nascent industry within the member states. And so they got together and formed the East African Development Bank, which was following the model of the African Development Bank that had been established 4 years earlier. Essentially, the mandate of the East African Development Bank at inception was to provide long-term funding in foreign currency for the growth industries. At that time, it was not very easy for entrepreneurs who were just starting to get the necessary foreign currency to procure equipment and other inputs. So the East African Development Bank was established for that purpose. It was also established to provide equity investment into government-led parastatals, particularly in the agriculture sector and in the tourism sector. And the bank has played its role in that regard over the years. In the mid-80s and early 90s, it was felt that there was need to promote smaller businesses, which would then develop into a critical mass within the community in providing employment, in providing technical skills, and in also just spreading the entrepreneurial skill throughout the community. And so the bank started to finance smaller projects than it had before, working with entrepreneurs who are starting up greenfield projects, providing them with the necessary technical assistance when it was required. And we have seen those small businesses that were started in the 80s now grow into regional multinationals. Where we are now, the mandate still remains the same, to provide much needed foreign capital for growth industries, particularly where the sector is new or has not been developed to the extent that the commercial sector or the commercial banks would feel comfortable in financing. But in addition to that, with the coming together of the member states in the new revived East African community, the regional integration and the common market, there's now need to develop regional projects jointly owned by the member states or promoted by the member states. So the mandate is even greater than ever before.
Is the change forthcoming?
Oh yes, the mandate would go very much with the financing that is necessary, and the member states of the East African Development Bank and the other shareholders have also pledged to provide the necessary funding, and also in addition to that to lend their voice and their hand when we go out seeking financing beyond the East African borders.
Well, ma'am, we have traversed the countries that you are represented in this region, and what we got to see are people who are in big business, like airlines, and also those who are exporting flowers, maybe started a little bit small, but they are growing. The issue, however, maybe for the jaw soap that's watching us is, can I get into that bank? These are huge ivory towers, air-conditioned. Let's demystify that.
The East African Development Bank, I think the only common denominator probably with the other banks is the word bank, but it's actually a development finance institution. It operates rather differently from your conventional bank in that our mandate requires us to go out and to work with businesses and entrepreneurs wherever they are, and to team up with them at whatever stage of development that they are in. So you'd find us in areas of the economy, sectors of the economy, that the conventional banks would not at this particular time be focused on. We also are sure that sometimes we meet our entrepreneurs at whatever level of development that they are. And in that regard, we have to help them by providing them the technical assistance. So developing their business plans, bringing up their skills level, working out to find the optimum financing for them, because it may not just be a straight loan. It may require some structuring in order to make it useful to the particular company at that particular time. So we're really available, not just to provide financing, but to provide appropriate financing and also to provide solutions for would-be or growing or expanding businesses.
Well, ma'am, you are at the helm of this bank, and they say new brooms do sweep clean. Talk to us about where you want to take this bank. And of course, you spoke about now having maybe another mandate of being told to build big infrastructure. Your vision.
This bank is poised to really take a critical and leading role in the integration of East Africa. It's poised to grow and develop not just the business sector, but also the infrastructure that is necessary to support the commercial enterprises within the region. And I see the bank being at the forefront of not just developing those projects, but also getting the financing that is required. You'll understand that these will be capital-intensive projects when you're talking about rail or road transport or water, transport. These are heavily capital-intensive projects. But the bank being owned or having common ownership of the 3 member states, of the 4 member states, will be in the right place to be able to get the necessary financing at the right price and probably within the required timeframes.
Well, ma'am, thank you very much for having been my guest. We hope you continue to build those building blocks for integration in East Africa. Thank you, ma'am.
Thank you very much for the time. Thank you.
It's now agreed that regional integration is critical for Africa's development, and development financing is key. Well, having visited 4 countries where the EADB has a presence, it's very clear that this bank has already started building those integration blocks. For Eye on Africa, I am Daniel Makokera. Goodbye and good night.